To Cheryl Casone we go. Cheryl.
Yeah, let's start with the year-over-year headline number. That came in a little bit hotter than expected, 8.5. 8.5. That is the headline number for the Producer Price Index. And also looking at the month-over-month, the headline number, that came in hotter than expected at 0.4%. The estimate was 0.2%. So again, first to the headline numbers, to be clear, hotter than expected on both reads for the month of September for the Producer Price Index, 8.5%, and then 0.4% month to month. Now to your core numbers, which is what the Fed looks at, but we all talk about obviously headline here. 7.2% is the headline number core year over year. Excuse me, the core year over year number is 7.2%. The estimate 7.3. So that came in a tiny bit under expectations. In line month to month on core for September, 0.3%, 0.3%. So again, these numbers coming out. And if you look at what I'm going to go ahead and tick ahead till tomorrow to send it back to you guys for CPI. This is producer prices wholesale. Tomorrow's CPI, the expectation's 8.1%, Maria, for that headline number. And that's coming down from 8.3%. But this is hotter than expected. Does this mean tomorrow's going to be hotter than expected? The survey data that the government does is exactly the same amount of time. It's the first 3 weeks for the month of September. So again, giving you all of these numbers, and hotter than expected. Dow was higher, much higher than it is now. It's only up by 80 points now. Back to you guys.
All right. Thanks so much, Cheryl. Michael, your reaction to this inflation number, which is obviously worse than expected, and yet we're not really seeing, well, the market's up, but off of the highs, as Cheryl told us.
Yeah. I mean, just the fact that, we're at the mercy of 10 basis points here or there, and policymakers are setting policy 10 basis points here or there is kind of scary and unnerving. Just shows you how myopic this backdrop is. And so, yeah, that's the issues that where we are in the cycle here, you're still seeing the lagged effects of a booming economy through higher inflation. We're especially seeing that in the employment backdrop. So that's the risk next for tomorrow's core CPI report, that inflation remains strong because of the lagged effects of housing remaining strong and the labor market remaining strong.